The American pickup truck market is in free fall, and what's happening right now is almost unbelievable. Just a year ago, dealers were selling fully loaded trucks for eye-watering prices. $70,000, even $80,000 wasn't unusual. Shiny new half-tons with every option, luxury interiors, and towering suspensions were flying off the lot at record profits. But today, those same trucks are sitting unsold, gathering dust, and dealers are slashing stickers to numbers no one thought possible. We're talking brand new models that once commanded a small fortune, now being advertised for barely $20,000. Buyers are walking in and leaving with deals that sound like typos, and it's sending shockwaves through the entire auto industry. This isn't just a few desperate dealerships making a sale. From Texas to Michigan, auction yards are overflowing with trucks repossessed after buyers fell behind on payments. Financing rates climbed, wages stayed flat, and suddenly those massive monthly notes turned into a burden people couldn't carry. Banks don't want a yard full of trucks, so they're dumping them at wholesale prices. The ripple effect is brutal. Manufacturers who spent years chasing high margins on luxury trims are now watching their inventories swell, while used values collapse almost overnight. Even the big names, Ford, GM, Ram, are scrambling. Incentives that used to be a few $1,000s have ballooned into staggering rebates. Some dealers are stacking discounts on top of factory cash, desperate to clear their lots before the next shipment arrives. Trucks that were once a badge of pride for Middle America have turned into liabilities on the balance sheet. And it's not just domestic brands feeling the squeeze. Toyota's Tundra and Nissan's Titan are also being marked down in ways that would have been unthinkable just months ago. Behind the headlines is a deeper economic story. High interest rates have cooled demand across the board, but pickups, long the symbol of American prosperity, are showing the cracks first. Contractors who relied on steady construction work are delaying purchases. Rural families are keeping their older vehicles running longer. Fuel costs remain stubbornly high, making giant V8s less attractive for everyday driving. What was once an unstoppable market is suddenly flooded with supply and shrinking demand. A perfect storm that's forcing prices lower every single week. And this crash is creating winners and losers you might not expect. Bargain hunters who waited out the pandemic bubble are finally stepping in, scooping up trucks at prices that seemed impossible in 2022. Meanwhile, people who bought at the peak are staring at trade-in values tens of thousands below what they owe. Negative equity is becoming the norm, and lenders are quietly bracing for more repossessions as the market keeps sliding. Dealers whisper about fire sale weekends and silent markdowns, where the true price is only revealed once a serious buyer walks through the door. The question everyone is asking now is, how low can it go? Analysts who once predicted a gentle softening are revising their forecasts weekly, warning that the bottom might be farther away than anyone thought. Factories are slowing production, but with so many unsold trucks already in the pipeline, the imbalance could last well into next year. What started as a slow drip of discounts has turned into a flood, and the industry is scrambling to find a floor. Manufacturers are already rethinking their strategies, quietly shelving plans for expensive trims, and reconsidering their push toward bigger, more luxurious pickups. Electric truck projects that counted on high sticker prices to offset development costs are suddenly looking risky. Dealers who built gleaming new showrooms expecting endless demand are tightening their belts, cutting staff, and holding emergency meetings about survival. It's a dramatic reversal that few insiders were willing to predict, and it's unfolding faster than anyone can react. Every sign points to a market correction that's not just temporary, it's systemic. Fleet buyers who once propped up sales are negotiating rock-bottom prices or walking away entirely. Used car dealers who made fortunes flipping low-mileage trucks during the pandemic are now watching their lots sit quiet, forced to slash prices daily to stay ahead of the decline. Even rental companies, once desperate for inventory, are offloading vehicles at auction because demand simply isn't there. The great truck boom of the past decade is unwinding, and the speed of the reversal is stunning everyone from Wall Street analysts to small-town dealers. Buyers who once treated pickups as long-term investments are now realizing their trucks are depreciating faster than they can make payments. Stories are spreading of owners who drove a new $75,000 truck off the lot last year and now can't get a $35,000 offer, even after spotless maintenance. Trade-in counters are delivering jaw-dropping appraisals that leave customers stunned and angry. This sense of panic is pushing more people to sell quickly, which only accelerates the downward spiral in prices. Dealers describe it as a snowball effect. Each desperate sale triggers another round of markdowns across the region, keeping everyone on edge. Banks and credit unions are quietly rewriting their risk models. Loan-to-value ratios that were once generous are being tightened almost weekly, meaning buyers can borrow less and must bring more cash to the table. That further shrinks the pool of qualified customers. Some lenders have already increased their minimum credit score requirements for large truck loans, fearing a repeat of the subprime auto crisis. As a result, even those ready to buy at these bargain prices are discovering the financing doors are slamming shut, creating yet another layer of pressure on an already collapsing market. Meanwhile, factory lots are becoming holding yards. Aerial photos show row after row of unsold pickups stretching for acres, a sight reminiscent of the 2008 financial meltdown. Manufacturers are quietly paying to lease extra storage space near ports and rail yards, hoping to weather the storm without having to announce massive production halts. Insiders say executive meetings are dominated by questions of how to stop the bleeding, whether to cut production drastically or gamble on incentives big enough to entice hesitant buyers. The ripple effects go far beyond automakers. Parts suppliers that scaled up during the boom are reporting sudden drops in orders. Small-town economies that depend on truck assembly plants are bracing for layoffs. Even advertising agencies that thrived on flashy pickup campaigns are seeing budgets evaporate overnight. What once seemed like an unstoppable ecosystem built around America's love affair with big trucks is showing cracks in every direction. And while mainstream buyers hesitate, opportunistic flippers are combing auctions and dealer backlots, betting they can ride the volatility for quick profits. Some independent resellers are shipping these trucks overseas to markets where demand remains strong. But the flood of inventory is so overwhelming that even export channels are becoming saturated. Industry veterans warn that if foreign buyers step back, the domestic market will face yet another shock as overseas outlets dry up. Analysts are now drawing parallels to past economic downturns, noting that pickup sales have long been a bellwether for broader financial health. When small businesses and contractors stop buying, it's often a sign that the wider economy is slowing. Economists are watching construction permits, freight volumes, and consumer confidence indexes closely, looking for confirmation that the truck crash is an early warning of something bigger. If those indicators keep sliding, the pickup market's plunge could be just the beginning of a larger economic chill. In the midst of all this, automakers are experimenting with unconventional tactics to move metal. Some are offering unheard-of lease deals with rock-bottom monthly payments. Others are bundling maintenance plans, fuel credits, or even home charging equipment for hybrid and electric models at no extra cost. But even these sweeteners are failing to generate the frenzy of past years. Buyers have become cautious, sensing that waiting a few more months could mean even deeper discounts. This collective hesitation is freezing the market further, creating a feedback loop that no one in Detroit expected. Industry insiders whisper about the cliff, a point where production cuts and bargain deals collide with falling consumer confidence to create a long-term slump. If that happens, it won't just be an auto story. It will ripple across steel producers, shipping companies, and entire regional economies that depend on truck sales for stability. For now, everyone from executives to weekend truck enthusiasts is watching closely, bracing for what could become one of the most dramatic price resets the automotive world has ever seen. Suppliers who invested millions to expand capacity during the boom are already feeling the strain. Plants that once ran 3 shifts around the clock are quietly cutting back to a single shift, sending thousands of workers home early. Over time, that once padded paychecks has vanished, and local economies that grew dependent on those wages are tightening their belts. Restaurants near assembly plants report fewer lunch rushes, and small contractors who relied on steady parts orders are scrambling to diversify before the slowdown becomes permanent. Dealers themselves are confronting a hard truth. The high-profit era of oversized trucks might be over. For years, dealerships thrived on luxury trims loaded with tech packages and leather interiors, but those models are now the hardest to move. Managers who once boasted about selling every truck at a premium are huddling with finance teams, debating how far below invoice they can go without taking a fatal loss. Some have even started selling at cost, or slightly below, hoping that service contracts and future customer loyalty will eventually make up for the hit. Across the country, transport companies that move new vehicles from factory to lot are sitting idle. Car haulers that once made back-to-back runs across states are parked in rows, their drivers sent home or forced to take lower-paying freight gigs. Railroads that depend on steady auto shipments are revising their forecasts, warning shareholders of declining volumes. What was once a finely tuned supply chain is grinding down as every link in the network, from metal stamping to last-mile delivery, feels the slowdown simultaneously. Even the aftermarket is changing. Accessory shops that built their business on lift kits, custom wheels, and performance upgrades are reporting fewer customers. The culture of personalization, once a point of pride for truck owners, is dimming as buyers focus on essentials and postpone non-critical spending. Paint protection film installers, bedliner specialists, and high-end audio installers all say foot traffic is the slowest they've seen in a decade. Financial analysts point to one more looming threat: insurance. With resale values dropping so quickly, many owners are discovering their comprehensive coverage won't fully cover what they still owe if the vehicle is totaled or stolen. Gap insurance claims are climbing, putting pressure on insurers and further scaring would-be buyers. Lenders, watching these trends, are tightening credit even more, which adds yet another barrier to any potential market rebound. Meanwhile, consumer sentiment surveys reveal a striking shift in priorities. More drivers say they're reconsidering whether they even need a truck at all, especially as compact SUVs and hybrids offer enough utility for daily life at a fraction of the cost. Younger buyers, once enamored with the image of a towering pickup, are turning to smaller, more efficient vehicles or even public transit in urban areas. The cultural cachet of owning a massive truck seems to be waning, hinting at a deeper, generational change that could reshape the market for years to come. All of this leaves automakers in uncharted territory. The strategies that worked in past downturns, big cash rebates, 0% financing, aren't sparking the same urgency. Consumers are better informed, tracking prices online and sharing insider deals on social media. Many would rather wait for the absolute bottom than jump on what used to be considered a bargain. Executives now face the challenge of not only cutting costs, but also rebuilding consumer trust in a market that feels like a moving target. As inventories swell and confidence fades, the question hanging over Detroit isn't just when prices will stabilize, it's whether the American love affair with the pickup truck is fundamentally changing. Every week of hesitation adds pressure to factories, workers, and local economies, setting the stage for an industry reckoning that could redefine what a must-have vehicle looks like in the years ahead. Industry veterans who've weathered recessions before admit they've never seen consumer psychology shift this quickly. A pickup truck was once a symbol of resilience and upward mobility, something families aspired to own. Now it's becoming a cautionary tale about overextending credit and chasing status. Truck forums that used to celebrate bigger lifts and louder exhausts are filled with threads about refinancing, negotiating payoff amounts, or even voluntarily surrendering vehicles to avoid crushing debt. What used to be a lifestyle has turned into a financial warning. Regional disparities are making the crisis even more complex. In oil-producing states where heavy-duty pickups are essential for work, demand is softening but not collapsing, while suburban and urban markets are seeing prices freefall fastest. Dealers in coastal cities are aggressively undercutting one another, creating a domino effect that ripples inland as transport companies reroute discounted inventory to rural lots. This geographic whiplash is forcing manufacturers to rewrite their distribution strategies on the fly, trying to match shifting demand before losses spiral further. Even government policy is playing a role. States introducing tougher emission standards and higher registration fees for large vehicles are accelerating the decline. Buyers who might have stretched for a big V8 are weighing future costs and turning to smaller hybrid options instead. Incentives for electric trucks remain, but with consumer confidence shaken, those programs are no longer enough to push buyers into new, high-priced technology. The once clear roadmap toward electrification is now riddled with detours and second guesses. Fleet operators, delivery services, utility companies, and municipal governments are also pulling back. Many locked in bulk orders during the pandemic at inflated prices and are now delaying replacements to avoid writing off heavy losses. Their absence from the market removes a stabilizing force that usually cushions downturns, leaving retail buyers to carry demand that simply isn't there. Without those large contracts, production schedules become harder to plan, and suppliers are left with unpredictable swings that make long-term investment risky. The used market, once a reliable pressure valve, is overwhelmed. Auctioneers report marathon sessions stretching late into the night as they try to move mountains of inventory, but bidders have grown cautious. Dealers who once bought entire lanes of trucks now cherry-pick only the cleanest, lowest mileage examples, leaving rows of unsold vehicles to depreciate further in holding lots. Each unsold truck drags down prices for the next batch, deepening the spiral. And while automakers slash production forecasts, they're facing another threat: legacy contracts with unions and suppliers that lock in high fixed costs. Cutting output doesn't immediately reduce those obligations, so every unsold truck represents a compounded financial hit. Analysts warn that if this imbalance persists, we could see plant closures or temporary layoffs on a scale not witnessed since the Great Recession, sending economic shockwaves far beyond the auto sector. Technology that was supposed to be a selling point is turning into a liability as well. Trucks packed with complex infotainment systems and expensive sensors carry higher repair costs, scaring off used buyers worried about long-term maintenance. Certified pre-owned programs, once a lucrative bridge between new and used sales, are faltering because dealers can't justify the refurbishment costs when resale values are in free fall. This leaves aging inventory sitting even longer, a dead weight on balance sheets. As the market teeters, analysts debate what the new normal will look like. Will Americans recalibrate their expectations towards smaller, more affordable vehicles for good? Or will a sudden economic rebound rekindle the appetite for towering, $80,000 status symbols? For now, the only certainty is that the forces reshaping the pickup landscape are bigger than any single brand or model, a convergence of economics, culture, and technology that's rewriting the rules of the road in real time. Some Wall Street analysts are now warning investors that the slide in truck prices could foreshadow deeper cracks in consumer spending. Pickup sales have always been a bellwether for small business health. When contractors, farmers, and tradespeople pull back, it signals that confidence in future work is fading. Reports from regional banks show fewer applications for commercial truck loans, and that tightening credit feeds a feedback loop. Fewer buyers mean more price cuts, which scare lenders even more. What began as a market correction is starting to look like a structural reset, and that has economists watching housing starts, freight shipping, and even commodity prices for signs of a broader slowdown. Inside the automakers' boardrooms, the mood is tense. Executives who once greenlit billion-dollar EV pickup projects are quietly revisiting spreadsheets, questioning whether the high-margin future they promised investors is still realistic. Some engineering teams have been told to delay or scale back upcoming luxury trims, while marketing departments are being ordered to pivot toward affordability and practicality. The once proud mantra of "bigger is better" is giving way to phrases like right-sized and efficient, a sharp turn from the chest-thumping ads of just a few years ago. Union leaders, too, are on edge. They know that prolonged production cuts could threaten hard-won contracts and pensions. Meetings with automaker management have grown more frequent and more urgent as both sides try to avoid the kind of confrontations that led to lengthy strikes in past downturns. Workers on the line sense the tension, wondering if overtime, or even their jobs, will survive the next round of cost-cutting. Through it all, one truth grows clearer with each passing week. The American pickup truck, once an unshakable symbol of prosperity and rugged independence, is being forced to evolve. The oversized, ultra-luxury models that defined the last decade may soon give way to a leaner, more practical generation of workhorses. Whether that transformation takes months or years, the forces driving it, economic reality, shifting culture, and hard lessons about debt, are already rewriting the future of the most iconic vehicle on U.S. roads. And that's where we stand. An industry once defined by unstoppable growth now facing a reckoning it can't ignore. Pickup trucks that once symbolized limitless prosperity are suddenly a case study in how quickly markets can turn. Whether you're a potential buyer waiting for the perfect deal, an owner watching your trade-in value sink, or simply someone tracking the broader economy, these falling prices are more than a headline, they're a signal. The next chapter will determine not just the future of America's favorite vehicle, but the health of the industries and communities built around it. If you found this deep dive eye-opening, hit that like button and share your thoughts in the comments below. Are we witnessing a temporary correction or the permanent end of the $80,000 truck era? Subscribe and turn on notifications so you don't miss the follow-up as this market story continues to unfold. The road ahead is changing fast, and we'll be right here to break it all down.